From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, traders, S&P rollover, Chop Fest. The high of the day in the S&P came in at 2106.70 early, right after the open, or early in the day. The low came in at 2098.20 mid-morning. And last, we're 2099 even. We're down 2 ticks on the day. Can you believe that? All that up and down, and only we're back to up 2 ticks or down 2 ticks on the day? Well, actually, the futures just rallied, so I don't know exactly where they're at right now. The MIM started showing big for sale. I put it out right away. The futures buckled a little bit, and then the MIM gradually went down to like 900 to a billion for sale, and the actual MOC came out, saw 1.1 billion. You know, you knew that was coming when you saw the MIM big for sale right off the bat. Tomorrow we've got the PPI-FD number, and consumer sentiment. Now look, I think the first day of the roll really stymied today's trade. Now, when you look at the overall volume, I didn't do the volumes, 700,000 SEP minis traded, but 430,000 of that came from the SEP mini spread. And that doesn't include the globex volumes that traded. I think they were pretty small, only like 40,000. But you can do the math. And when you take out 70% of that, you're almost left with no outright trading volume here. They're literally, I mean, I'll figure it out later in the day, but I bet less than 200,000 S&P minis traded in the SEP contract throughout the day. That's extremely low. Now, the other thing is in the big S&P, they did 23,000 Junes and they did 23,000 SEPs. So literally, that's all spread volume. That means almost nothing traded in the pit. Sorry, Ben Lichtenstein. I don't know what you're yelling out there, but it must be getting slim pickings. Now, yesterday I did a vid, and I want to explain what's going on. We've had very, very bad connection here in the trading room, and we're getting it all redone, and we're going to have a new line, and we're going to be getting the vids up. It'll make it a lot easier to produce and get them going. So, you know, somebody said, hey, give up on the background of the CME. I can do that. Next week, maybe we will do a couple from the charts and stuff like that, kind of talk about the charts or whatever. But at the end of the day, what I was kind of trying to talk about in yesterday's video that we got cut off was that I called it. I said that the S&P was going up to 2,100 and that there was a chance that if it kept going, it could go to 2106, 2108, right to the top of where all the buy stops were. And 2108 was the exact high of the day yesterday. You can't beat that. Come on now. That came out. I put that together the night before. That wasn't something I put together right after the open or anything. Now look, it's been a slow burn. And I think it's going to continue to be a slow burn. And thus, I'm still looking for the PitBull's Thursday, Friday low, whether it be today or tomorrow. I still think that the statistics for Friday, the week before, are very good. Monday and Tuesday are very good. Tuesday gets a little weak. Thursday's back up, and Friday's back up. So we got a pretty bullish expiration that we're looking at this week. Now, I want to point out, I don't expect every one of those days to be up. You know, sometimes you get too many positive stats, the market's already up, you get a down day in there. I wouldn't be surprised about that at all. And then the last thing I want to do is a shout out about the bootcamp. Tomorrow's the last day to sign up for the bootcamp. And I got to be honest, if you're following me on Twitter, I'm probably not going to be using the Twitter or StockTwits or Hootsuite or anything very much next week. The group has come to me. They've asked me to kind of shut down the Twitter for a couple days while the guys can get more out of me in the boot camp, and I can't disagree with that. You know, it's 5 days of meeting everybody that in the MrTopStep collective. You get the MIM, you get all the closing imbalances, you get everything. So I wouldn't pass this up. And additionally, we're not going to be doing another one until late in the fall, and that will be the last one of the year. So we're going to leave it like that, you guys. You know, the markets are firm here. I think they're going back up, but again, I want to repeat this. I don't think we're going sharply higher or sharply lower anytime soon. We'll leave it like that. We'll see you tomorrow on the opening print.